Welcome to this brand new series of how to trade cryptocurrency. Throughout this, I'm going to teach you how to exactly trade cryptocurrency profitably. In this first episode, we're going to go over some core need-to-know basics about cryptocurrency first of all. In this case, we're talking about Bitcoin. Is this Bitcoin run that we're seeing now? Bitcoin and crypto bears are Bitcoin. If you look here on the chart around, it's sort of just underneath 42. Here is why the cryptocurrency...
This is big. This is significant.
So over these coming weeks, I'm going to teach you everything that I know about trading cryptocurrencies. Myself, I've been in the financial markets for well and truly over a decade, so a lot of experience there accumulated. And the thing is, what we want to do is start off with the very basics. And over these weeks, we'll get intermediate, we'll become more advanced and more technical, and how to specifically apply this knowledge that we're going to learn into the charts, into trading, into becoming profitable consistently. But firstly, we must walk before we can run. This is a marathon, not a sprint. We need to take our time, build up that knowledge slowly, organically, so that we can have longevity in this game. So the first thing I want to cover some ground on is what exactly is cryptocurrency? So cryptocurrency is a form of payment. It's digital, not like money that you have to carry around today, actual cash. Instead, it's all recorded online, on the internet, okay? It doesn't have a ruling authority or any centralized system. It's actually decentralized, where transactions are managed online, okay? And they're verified, not needing a bank. They're verified through peer-to-peer for transactions, both for sending and receiving. All transactions are stored on a public ledger, and cryptocurrency is stored within a digital wallet. Market capitalization. So market capitalization is the total value of all coins that have been mined. It's calculated by multiplying the number of coins that are in circulation by the current market price of a single coin. So look at it this way. We gauge as investors how safe or stable an asset is by looking at the market capitalization. The bigger, typically the more stable. You can look at it like this. If you have a big ship in comparison to a small ship, the big ship through stormy weather is likely to sail through more stable in comparison to a little ship. Just as the same thing for cryptocurrency. And in any market, when there is market volatility, the bigger the market capitalization, the bigger the cryptocurrency, the more stable it will be in those storms, those stormy periods, okay? So when an investor is coming to market, typically if they want stable investments, they'll look at bigger market capitalizations. Cryptocurrency fundamentals. Now, the tokens that you choose to trade, of course, typically speaking, are going to have a backstory. When I say a backstory, what is their purpose? What technology do they have? Behind that native token, there will be something, right? An ecosystem. What are they building or have already built? What purpose does it serve? What value does it have? It's important that we understand all this. So this is the token's fundamentals, the tokenomics, understanding the project's white paper so you can get a thorough understanding of exactly what they're doing. Okay, looking at their roadmap, what they've done so far and what's coming. Is there longevity in this project? We need to understand this stuff, because if we're going in and investing our money, even speculating on the short term, trading in this, say for example, you buy a specific cryptocurrency near term, you're trading it, and they are a bit of a moody or a shady project, and then eventually close up shop, what happens to your trade, your investment? It diminishes. So we need to be aware of these fundamentals, knowing who the team are, so that we can see that these guys are serious, they have credentials there, and they are building something that has value. And of course, look at the community as well. Just how engaged are people? What is there hype there? Because this is going to be dictating, and we're going to be seeing certain fluctuations with the token that you're trading, of course. All these fundamentals build a picture to help you technically when you're trading. Cryptocurrency pairs. Now, these are exactly what you're going to be trading, okay, when you are speculating in the market. Now, with your cryptocurrency pairs, it'll be the cryptocurrency versus the dollar, or versus USDT, or versus BTC, Bitcoin. These are the pairs where there'll be most volume. As an example, ETH, Ethereum versus BTC, or Ethereum, ETH versus the dollar, or ETH versus USDT, Tether. So just to show you, look, right with me here, you can see Bitcoin, BTC versus the dollar. You can see Ethereum versus the dollar. Or we can look at ADA versus Tether, USDT. Another example as well, will be to look at Ethereum, ETH versus BTC. Now, these are the ones that you want to be looking at in terms of dollar versus the dollar versus Tether and versus BTC. That's where most of the volume is going to be happening. Now, also remember what we spoke about with market capitalization. The bigger the cryptocurrency by market cap, when you are trading in the market, it's going to be more stable to trade. There's going to be more volume happening there. So that brings us an end to our first episode. In our next one, we're going to start getting more technical, taking our steps into margin trading, covering ground on candlestick patterns, how to read the charts there, looking at support and resistance, looking at trends, chart patterns, to start getting more technical so we can look at applying this knowledge gradually. As I say, this is a marathon, baby, not a sprint. I'll see you for the next episode. Let's get it.